In the last 2 weeks, I've managed to make over $18,000 trading only 2 hours a day. And in this video, I am going to break down the exact strategy that I have used so that you can also do it yourself. If you are new to the channel, subscribe. My name is Joseph and I work with moms and dads and I help them quit their 9-to-5 and go full-time trading. So if that is you, check the links in the description. Alright, so let's get into the video. This is the only price action video you will ever need in your life. I promise you that. So make sure you stick to the end because this video is broken down into 3 sections. We have timing, we have candles, and then in the end we are going to connect all the dots, and then we will head over to our computer where we shall look at examples that you can use to get started. All right, number one is timing. So this is the most important thing in trading because contrary to popular belief, if you have an opportunity to make money 24/7, it's crazy. You cannot make money 24/7. You need specific times of the day when you have the highest probability to make money. And with timing, we have what we call sessions. So with sessions, we have 3 sessions. We have Asia, we have London, and we have New York. I primarily trade the New York session, but let's look at the time. So for Asia, it's from 9 p.m. to 11 p.m. New York time. So you'll notice we only trade 2 hours a day. For London, it's from 3 a.m. London is from 3 a.m. to 5 a.m. New York time. And then New York is an exception. We only trade 1.5 hours a day. And that is from 9:30 a.m. to 11 a.m. New York time. So when you come to the market at this time, I guarantee whichever strategy you are using, you will have a higher probability of winning. Why? Because this is when the market is opening. So when the market is opening, there is something that happens that most people don't know. And that is we have an increased volume. And volume plays a big role in creating big candles. So there's no point of you coming to the market and trading the small candles that look like this, consolidation. I want to trade when the candles are massive. So volume dictates the size of the candle. So come to the market at those times and you will have increased your chances of winning. Now, once you come to the market at the right time, you need to understand what you are looking for. And this brings us to number 2, which is candles. Now, most of you don't really pay close attention to candles. And I'm going to show you in this video the correct way to predict candles. Now, let's start with breaking down what a candle is. So we have 2 types of candles. This is a blue candle like that. And we also have a red candle like that. The difference is in the colors. So to make it as simple as possible, when you see a red candle, think of it as danger. And if it's danger, what is happening? We are going down. If you see a blue candle, think of it as good. Things are well. So what is happening? Price is going up. Let's use blue. Like that. So that is number 1. Regardless of the size. Now, you'll find some candles look like this. But it's blue. It means we are still going up. So if it looks like this and it's red, it means we are going down. So you cannot discriminate any candle. They have emotions. If you discriminate them, they are going to hunt you and they are going to take your money. So that is number 1. Number 2 is understanding the structure of a candle and its importance. I know all this is in baby peeps, but you did not pay attention to class. So pay attention to this class. Now, a candle has this box, which is called the body. So from here to here is called the body. And then we have these lines. These are called wicks. And they happen in all the candles, whether it's blue or red. The body is there. And then we have the wicks. Now, you also need to understand how to label a candle. So let's use this red candle. Now, visualize what's happening when a candle is forming. So when a candle is forming, it starts out like a line like that. So if it's here, this one, so this one was a bullish candle. The next candle begins at the close of this candle, like a line like that. And then what happens? It goes down, and then it goes up. Depending on how it behaves, the market goes up and down, up and down, up and down. And if you look at trading view, up to your left here, there's always time. So if this is a 5-minute candle, here you have always 5 minutes, and it's like a stopwatch. It goes for 39, 38, 37, like that, until the 5 minutes is over. Once the 5 minutes is over, the candle closes. So I am always paying attention to the candle, and I am always paying attention to the time so that I can see when the candle closes. And this is important because the structure of a candle has 4 things. We have, let's draw another candle like that. This is called the high. So we will draw a line like that. This is the high. It is the highest point the candle reached. So if it's a 5-minute candle, in that 5-minute period, the highest point that candle reached is called the high, and the lowest point is called the low. That is number 1. Number 2, we have the open and the close. So if it's going down, it means the candle opened up, closed down. So if it closed down, it means we are going down. Now, the complete opposite is true. If the candle opens down and closes up, it means we are going up. And that's very important. So the close always determines the direction of the candle. Keep that in mind. The close always determines the direction of the candle. So now we have the high, we have the low, we have the open, we have the close. Why is this important? This is important because we are always paying attention to the high and the low as. So this becomes resistance. So if you're thinking of support and resistance, the easiest way to identify support and resistance is identify the high and the low of a candle. So we have resistance there, we have support down here. And that is number 1. Always know that the high and the low is support and resistance for the candle. So why is this important? This is important because when you have support and resistance, then trading becomes very easy because the markets only do 3 things. So the markets will do 3 things. Number 1 is we will go up in an uptrend like that. Or we will go down in a downtrend like that. Or we are just going to consolidate. So I want to show you this type of movement represented in candles. So if we are going up, the candle looks like this. All right? It's going up. If we are going down, then obviously the candle looks like this. And then if we are consolidating, the candle looks like this. It's a small candle. So how do you know we are going up, we are going down, or we are consolidating? Now this is where we go to the 3rd step, which is now connecting all the dots. So first of all, you come to the screen at the right time. And this line here will represent the beginning of our timing window. I'll use the New York session because it's far much easier for me. That's what I trade. So we are trading at 9:30 a.m. We are using the 3-minute time frame for those that are wondering. Now, on this axis to the downside is time, and to the upside is price. So time, this is now simple math. When we go to the left, it's 9:30, we have 9:27 a.m. And this is the candle we are interested in. So if you follow that time up, it will be a candle. Let's use a bearish candle. Looks like that. So it's just one candle. Now, this is what we call our reference candle. And it gives us what? Support and resistance. So what do? You draw your area of support and resistance like that. That is step 1. Step 2 is we wait for the market to open. Now, the market opens at exactly 9:30. And we want to trade that market open because this is when we have the most volume in the market. So, remember now the candle. The candle is telling us that we are going where? We are going down because of the color. So we just need the same color to continue in that direction for us to know where the market wants to go. So when the market opens at 9:30, we want to see the candle open, and then we want to see the candle going below our support. And then we are also paying close attention to the time here. So usually it's a 3-minute cycle. So we are looking at time and the candle. And you'll notice usually in my stream, before you take a trade, I am counting 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. We are waiting for the candle to close. You need to wait for this candle to break out and close. Once it closes now, you have your confirmation. Where are we going? We are going down. So what do? You take a sell position at the close of this candle. And then you put your stop loss above that candle. Why? We do not expect price to reverse because we want it to go down. If it's going up, we are wrong. We should be buying, not selling. Now, we are targeting a 1:3. So if you are risking here $100, then here we want to see plus $300. So all you do is put your target where if it hits your target, you get out with $300. And this also applies in the reverse. So if this was a bullish candle, so we'll have to create a new one. So if this was a bullish candle at 9:27, then obviously it's very clear where price wants to go. This is telling us we want to go up. So we draw our high and our low, which is our area of resistance and support. So we want the next candle to break out. Remember, we are looking at time here. So we pay attention to time and we pay attention to the candle. So when the candle closes above like that, where do you think the next candle is likely to go? It's likely to continue higher like that. And it's as simple as that, by the way. There is nothing complicated. And the reason we have so much confidence is because we know the secret time. While most traders want to trade every day, every single hour, we are coming to the market when we have the most volume. And with volume, we've just said that there is big candles. So we just need one big candle to make us money. And then we are done for the day. Usually our trades take 3 minutes, 5 minutes, at most 10 minutes. So this is exactly the strategy that I am using currently to pass my prop firms. And I am making crazy money. It's crazy. This is crazy. So I'll start flexing on you very soon. So let's go to the charts themselves so that I can show you real life examples. Watch this video here or somewhere here and it will explain to you exactly how that strategy works.